Market Club with your 1 p.m. market update for Monday, the 28th of November. We've had some really crazy markets, that's for sure. And maybe this is the time you should be considering one-on-one Market Club coaching for 2012. You know, I can't stress how it will improve your trading, because it will. I know when I started my career some 30, 40 years ago now, I would have loved to have had someone show me the ropes, literally show me the ropes. It's like having a coach who, it doesn't matter if you're playing tennis or anything else or golf, it's good to have someone show you the way to do it correctly, the successful way, let me put it that way. So the free consultation, it's a free call, 877-219-1482. So give us a call at that number. As I say, the number, it's a free, toll-free number, and it's a free consultation. Just see if it's right for you. That's all you have to do today. Look, in today's huge up move in the equities, is it going to continue or just fizzle out? You know, the sharp downward trend in most of the markets last week was dramatically reversed today with huge gains in the equity markets, as I said, crude oil, gold, and many other markets. Is this the start of a new trend? I think it's way too early to tell. Last week, we witnessed tremendous liquidation in the markets across the board. This week, we would not rule out the possibility of a counter-trend rally, which today's market action could well be. With the silly season for trading getting closer, we refer to the silly season as any trading after December 15th. The reason I mention this is that it has been a difficult year for many investors and hedge fund managers, and you don't want to be swinging for the fences to make up your numbers in the last 2 weeks of the year. In fact, the last couple of weeks have been a rehearsal of what December is going to be like. Thin trading volume and erratic swings, so be careful out there. As always, we trust our trade triangle technology and allow that technology to lead us to profits. Okay, let's go take a look at the charts and the video and see how we can create and protect your wealth for the remainder of 2011. So give us a call, as I say, 877-219-1482. It's a free consultation. I think you'll enjoy speaking to our folks. So let's go to our markets, and here we are on our home page. As always, we're going to go to our portfolio manager, and of course we're going to be looking at the S&P 500, which is now turned, if you remember, this is a minus 100. When we last reported this last Wednesday, because of the holidays, we didn't do a broadcast on Thursday or Friday because of Thanksgiving. We did do a broadcast this weekend with a little stereophonic effect there because we had some problems with the microphones, but no problem. I think everything's fixed now. So minus 75, it's not quite as bearish, but you've got the Dow and the NASDAQ still 90 in a strong downward trend despite today's move. So let's go take a look at the S&P 500 first of all. You can see a big move up. If we put our daily trade triangles in, you can see we just had one today. Last one we had was back here, and that was, let's see, let's just take a look. Let's just take a look and see what level that was. That was at 1238. So here, this came in at 1196. So again, this made a turn. We're coming back into the Donchian trading channel. I would not be surprised to see this market come back a little further. I think it's going to take more than just today. And I don't believe we're going to see this market reverse back down tomorrow. I think we'll see this market gradually maybe correct itself to the upside. I think, generally speaking, we could be looking at, if we can put our Fibonacci numbers in where we see this market potentially going. So we'll just measure it from this point here, pull it down to the lows, and we could be looking somewhere at the 1220 to 1230 area as a resistance zone. Certainly the 1200 psychologically will be a resistance area, which is a 38.2% retracement. But I would say getting back here. But what we need to see, usually what happens is you see if a market's going to turn around. I'll put my telestrator on now and show you. Now take that off and put my telestrator on. So generally speaking, what we should look for in this market, in my opinion, is we should see this market probably do something like this, but you need to see it sort of roll over. This is too big a day to short unless it were to close down here, which I don't think it's going to do, but it's too big a day on the upside. A lot of people were zigging instead of zagging here. We got out of the trade channel. We talked about this because we talked about the market being very oversold, and of course we pounded back here just one day. But the market is still lower. That's the important thing you have to remember. It's still lower for the last several weeks, and if you look at a weekly and a monthly chart, you'll still lower for the month. So I think there's a lot to be said for that. Our trade triangles are the two big ones. The monthly and the weekly are still negative, indicating a downward trend. So just be careful with that. But we'll be looking for a place to get add to short positions somewhere along the line here, but not necessarily today. So let's clear that off the screen, go to our next market. The next market's going to be the Dow, I believe. Yep, the Dow. And you can see much the same action there. We've come back into the Donchian trade channel. I think we need to sort of zap over. If we roll over again here, that's going to look very bad. And it's going to take a lot of energy to make this market go from a minus 90 with all the trade triangles down to all the trade triangles up. It would have to take a monumental move. We'd have to probably, I think, if memory would serve me correctly, we'd have to take out, we'd have to be up to about the 12,400 level to really get bullish on this, super bullish on this market. I don't think that's anywhere in the cards right now for the end of the year. We're still lower for the end of the year, and I think we're going to either close unchanged to lower for the entire year, which is a little bit of a disappointment for the bulls and also for the bears. Sort of nobody gets what they want this year. So let's go to our next market, and that's going to be the NASDAQ Composite. That is not acting quite as well. Again, we have all of our trade triangles in a negative mode. I'm going to take the dailies off because we don't, but I'll put the weeklies and the monthlies on. You can see the weekly kicked in here, the monthly kicked in back somewhere here. I think, well, let me just take that off. Well, the monthly kicked in at 2603, and I think that's the thing to look at. And we're looking at, well, it's all the way back here on June 16th. So even though you've had these up and downs, it really has never got bullish. So I think we'll just let that play out. But generally speaking, we are still negative on the equity markets despite today's rally. So let's go to our next market, and that's going to be silver. And silver is basically minus 85, still in a downtrend. You can see it's just sort of rolling over here, not doing much of anything to get excited about. I mean, just rolling over. You can see the Donchian trade channels. We sort of, for the last 7 days, we've sort of gone sideways. But if we can break the, I think it's the 30-50 or even the 31 level, you may get some more downward pressure here. But nonetheless, it's not acting so well. And the reason for that, quite frankly, I think silver is sometimes tied into an industrial metal as opposed to a precious metal. It depends on which season you're in. But the formation is very similar to what happened here. Boom. We go here. Boom. Do we go down? Could silver go to $20 an ounce? Absolutely. There's no reason why it couldn't. But we'll see. We'll let the market and our trade triangles tell us what it wants to do. So let's go to our next market, and that's, of course, the big one. The gold market. The gold market was up quite a ways today, but it's not acting that well. I'm going to close this in to 3 months, and actually let's go to 1 month. You can see the market actually traded up as high as 1720, and it's currently trading 1708. It's not acting so well, and I think this is going to be a case of the market's continuing to build a base to perhaps go higher. But this is what's happening. We're closing in on the lower end of the Donchian trade channel and the upper end. See how this is conversion here? So something's going to happen to this market sooner or later. Longer term, we're still bullish with our monthly trade triangles. The weekly is telling you should, if you're an intermediate term trader, you should just be out of the market right now. And it's sort of definitely a mixed signal. And I think the best thing to do, unless you're a long-term trader, is just be on the sidelines in this market until our weekly trade triangle kicks in. And that kicks in, let's get long. So next market is going to be copper. In copper, again, this is put in a good performance. You had some doji lines here. Right, a doji is basically when you open and close at pretty much the same price, which we did. This is last week, of course, a very quiet week, thin week. And you went out below the Donchian trade channel. Normally when this happens, you sort of come back in, and that's exactly what we have done. Now, all of our trade triangles, with the exception of the daily trade triangle, are negative. So we have a minus 85, indicating the trend is down. And I think that's what you should be looking at for the time being. So let's go to our next market. And as always saying, copper, the trend is down. And this is crude oil. Now, crude oil is not acting well at all. Even though it's higher earlier, it took a lot of jump up. And you see, boom, and it's right the way back down. Now it's actually lower on the day. We closed last week at 98.09. We're currently trading at 97.65, so it's lower for the week. Not a good sign for this market at all, which is kind of surprising. But you can see we got to the Donchian trade channel. We just missed getting the SAR, the PSAR, at 101.10, 101.11. Just missed that. and we're coming right down here. So again, a lot of action going down, and I think one should be very, very careful with this market for the time being. It looks as though we put all our trade triangles positive, but it looks like we have to do some more work if we're going to see this market go higher. So let's pay close attention to that market and see how it develops in the next several weeks or several days. Let's go to our next market. Next market's the dollar index. Now, you know we've been bullish on this market, and of course it moved down below the 79 level again. The 78.50 was the resistance area. If I just move this, you'll see. We broke over that, of course, last week in a very dramatic fashion. You can see this. If I put my telestrator on, I'll just show you what I'm talking about. The market basically was having problems around resistance, I should say, right at this level right here. We broke over that level. We moved up to 79.50. We came back close today to test the support at 78.5. It's bounced back up. Looks like it's closing. Looks like it will close fairly well unless something dramatic happens later on. So the trend is clearly up with 2 of our 3 triangles positive, though daily is only negative right here, indicating maybe some sideways action. But longer term, you've got this market up and this market up. So again, the trend is clearly positive for the dollar at the moment, and that would be against the euro as well. So let's take that off the screen, go to our next market. And the next market we're looking at is going to be the CRB Reuters Jefferies CRB Commodity Index. And again, this market started off really robustly in the midpoint, came back into the channel, closing, not acting so well, under pressure. Excuse me. And it looks as though the downward trend, which we've been saying from 335 on the monthly, the market's currently trading at 307, is still negative. Our weekly was 312, it's still negative, and our daily came in at 317. So everything is still negative, and the action today, even though we had a big move up early, is not convincing me that this market's going to go higher anytime soon. We may see a sort of more sideways action before this market sort of peters out and goes lower. Big support is, of course, I'm going to scope this out further to 3 months. You can see it's the 305 level, and that if that level is broken, then I can see this market really going into sort of a deflationary type move. This is definitely the level to watch. A close below this level, let's say 302 or something like that, would indicate just this market has just been rolling over to the downside. So I would pay very, very close attention to that 305 level as a closing level. Below that would indicate further weakness. But again, you've got all of your trade triangles down, down, down. All 3 of them meaning a very strong trend to the downside. Here's Adam Hewison. We're back. We're going to have a full week here, but these are just very, very interesting markets. And again, once I was going to say, if you haven't given us a call for our personal consultation, just give us a call, 877-219. Let me take this off the screen. I beg your pardon. And then we'll certainly be happy to help you in any way we can. And as I say, there's no obligation. Just give us a call. See if it's right for you. Hey, Adam Hewison. I'll see you tomorrow at the same time, the same place. Have a great day trading.